Hi, everyone. Welcome to our webinar on chromium markets, where we are going to ask and hopefully answer the question, given the structural changes in the markets over the last 12 months, how should we think about South Africa's positioning going forward? In case you haven't engaged with us before, Project Blue, we're a market intelligence firm focused on critical material supply chains. And today we are very lucky to be collaborating with the ICDA, the International Chromium Development Association, representing members across the value chain. My name is Jessica Fung. I am head of consulting at Project Blue. Our esteemed experts today, Tanisha Schultz, she is senior analyst at Project Blue, and Sheraz Neffati, who is the executive director at the ICDA. Very, very happy to have you both on this webinar today. We will start with a short presentation by Tanisha, and then I'm going to ask our experts a few questions, and that'll be it. So over to you, Tanisha. We'll get your slide up.
Thanks, Jess. So to set the scene, I'd like to take a step back and look at what's been driving South Africa's ferrochrome industry over the past decade. There are three things on this slide: the rapid rise in electricity costs, the impact of domestic ferrochrome on domestic ferrochrome production, and what we expect over the next 6 months. South Africa's ferrochrome industry has spent more than 2 decades under pressure from rising electricity costs. Since 2010, Eskom tariffs have increased steadily, eroding South African competitiveness on the global market and has contributed to a decline in domestic ferrochrome production. A new electricity agreement has now changed that picture by reducing producers' effective power costs by around 30%. Through a market-linked pricing mechanism. It has improved the economics of ferrochrome production and has already encouraged some producers to restart idle capacity. So as a result, we do expect South African ferrochrome production to recover modestly over the next 6 months, although output is likely to remain well below historical levels. Thanks, Sheraz.
Thanks, Tanisha. That's a great explanation of what we've been seeing and sharing those views. So very quick follow-up for you. Let's go into Q&A now. These tariff cuts power costs by about 30%, as you mentioned, but the trick is in the details, right? Because it's only a 3 to 5 year deal with a clawback if prices recover. As you said, it's price linked. So in your view, beyond the next 6 months, does this effectively just keep the lights on at existing furnaces? Or do you think it's possibly enough for idled capacity to be restarted? And then on top of this, we're going to add another layer. So there have always been rumblings also about an ore export tax from South Africa to incentivize processing. So do we need both power price cuts and an export tax to achieve this? Is one more effective than the other? How should we think about this?
Thanks, Jess. So the 30% reduction in electricity costs is significant because power accounts for around a third of ferrochrome production costs. However, restarting many furnaces or restarting a furnace is a major capital decision. Producers need confidence not only in the power costs, but also in the chrome prices, chrome demand, exchange rates, and a long-term policy environment. So while we may see a handful of these restarts, I don't expect widespread capacity to return purely because of this agreement. It improves the competitiveness, but it doesn't remove the commercial risks. And so now that we have sort of seen some of this capacity restart, we need to think also about how some of these idle furnaces have been offline for a number of years, and that would require substantial capital to recommission these furnaces. And in order to do this, or if there were thoughts of doing this, the investments would need to deliver long-term results. In terms of the export tariff, I do not think that on its own it would reverse the trend. It's been a structural issue of high energy costs, but also South African ferrochrome has largely been exported into other jurisdictions, predominantly China. And 20, 30 years ago, South African ferrochrome played a very important role in the industrialization of China while they were building out their own capacity. And as time moved on, South African ferrochrome, while losing its competitive edge, was replaced by Chinese ferrochrome production to feed its own stainless steel. Africa's challenge has always been about competitiveness rather than ore availability. And so putting an export tariff in place doesn't actually reverse the trend of ferrochrome decline. While an export tariff could improve ore availability for local smelters, even then, many of these smelters are already integrated. It needs to be supported by a reliable electricity and efficient logistics and a stable investment environment. Otherwise, it won't be enough to drive that large-scale beneficiation on its own.
Understood. So I guess it's pretty clear on the supply side how things could evolve. So Sheraz, let's go bigger picture now. Let's talk demand. So in your view, where is the marginal ton of demand growth actually coming from? Is it still China, or are there new spheres of influence coming in?
Good question. And thanks, Jessica. Thanks, Tanisha. It's always a pleasure to be with Project Group and join the stage of a webinar. China, for us, and as we've seen from our analysis, it remains the largest source of chrome demand today in absolute terms, and it continues also to anchor the global chromium market. Although we've noticed a quarter-on-quarter decline in imports in Q1 2026, China imported approximately 6.5 million tons of ore to support its ferrochrome and stainless steel production. Whilst China will remain dominant, it's true, we see also demand growth that is coming from India and from Indonesia. But we do not see the market undergoing a sudden shift away from China. But that would be rather a gradual rebalancing of growth within Asia. It's also important to note that the Chinese ferrochrome industry has gone through significant expansion, as also Tanisha mentioned, which was also supported by competitive electricity costs, particularly in Inner Mongolia. Inner Mongolia is concentrated, I think, about 70 to 75% of the Chinese high carbon ferrochrome production. And also we've seen substantial stainless steel capacity development in China. So that allows us to say that China will remain critical to the chrome demand. Indonesia is the most significant new source of chromium demand growth because the country has been rapidly expanding its stainless steel and ferrochrome capacity, which resulted in a structural increase in chrome ore imports by Indonesia. We've noted that the ferrochrome production has been exceeding 1 million tons. It's a milestone in Indonesia in 2025. And we also see continued investment in the stainless steel capacity there, which will then therefore reinforce Indonesia's position as a major consumer of chrome. India is also emerging as an important growth market, supported by expanding stainless steel production and ferrochrome capacity. However, unlike Indonesia, India has domestic chrome ore resources, and the increase of the production will be primarily toward domestic value addition rather than export markets. And also we need to take a look at the geography of the ferrochrome production due to the decline of South Africa's position. South Africa, for the history, was the world's leading ferrochrome producer and also a major supplier to China, as you pointed out, Tanisha. But the industry has been facing significant structural challenges. We saw from your slide, 900% rise in electricity costs, power supply constraint, and a combination of other systemic issues. And China has been expanding its own ferrochrome production capacity from 13.8 million tons in 2019 to almost 18.3 million tons in 2025. So this has been weakening the South African ferrochrome competitiveness. And therefore, we've seen producers also shifting from ferrochrome export toward chrome ore to China, where demand remains strong. And for South Africa, we've seen a stagnation in the ferrochrome capacity, even a decrease, 6.7 to 7 million ton capacity in the mid 2010, and now 4.7 million ton today. And also now limited number of integrated producers. Only 2 producers remain. And if you look back 10 to 15 years ago, there were more than 10 ferrochrome producers in South Africa. So China, in a nutshell, will remain the main driver of chrome demand today. And Indonesia is rapidly also becoming an additional growth center. And we also expect increasing production in India as well as in Kazakhstan that may reshape the chrome supply landscape and support also the diversification of supply sources.
Thanks, Sheraz. I think that's a very interesting development that we're seeing. I think we've seen it across a number of commodity markets as well, not just in chrome. So it's exciting to see that there is a bit of a trend here across many of these critical materials. If we just turn the globe slightly and go to Europe, and let's talk about something a little bit different here, right? Because the CBAM, which is the Carbon Border Adjustment Mechanism, is apparently now live. So I guess the question for you is it shifting buyers toward low carbon ferrochrome? And does that impact suppliers from South Africa?
Good questions. One thing, and I've been discussing with some producers in Europe, and they say that what matters is the sustainability of the business and also the financial sustainability of the business. So, of course, it's true. With CBAM, we've seen that it has been raising awareness in procurement in terms of low carbon, or in terms of buying ferrochrome with a low CO2 footprint. And however, we also see that the purchasing decisions are also still driven by availability, by grade, also, excuse me, by grade, security of supply, and also eventually price. So ahead of CBAM implementation, we've seen precautionary inventory movement in the last quarter of 2025. We've seen that South African suppliers have been increasing shipments to Europe, rising 137% quarter on quarter. Also, we've seen Turkey increasing increasing exports to Europe by 53%. And these increases appear to reflect some preemptive stocking activity ahead of CBAM regulatory framework. It's important to note that Europe, although there are ferrochrome producers in Europe, 1 low carbon ferrochrome producer and 2 high carbon ferrochrome producer, it remains still dependent on imported ferrochrome. Domestic production capacity so far is limited, and utilization rates are under pressure. So we've seen from custom data that the imports account for approximately 70% of the European ferrochrome supply. Supply is concentrated among a limited number of producers also, with South Africa accounting for more than half of Europe's ferrochrome imports, followed by Kazakhstan, Zimbabwe, and other suppliers. So we think that this concentration also can create exposure to supply disruptions for Europe that can be linked to several constraints, as we've seen in South Africa, for example, energy constraints, which reduce then, therefore, supply from South Africa, logistic challenges, policy developments in producing countries, and also geopolitical events. We've seen that sanctions, for example, that affect supply routes also can impact, and have demonstrated that supply options can be constrained very quickly. So I would say that South Africa remains a strategically important supplier to Europe, although countries' carbon intensity, it's true, can be a challenge because it's still coal dependent in terms of the electricity. Although we see also within our members, South African producers make huge efforts to improve efficiency and reduce their emissions. But there might be some structural disadvantage for sure with producers that operate in areas with lower carbon electricity sources. Also, if we look at the broader competitive environment for European ferrochrome producers, this cannot be separated from changes in the stainless steel production. Most of the ferrochrome, high carbon ferrochrome, is being consumed by the stainless steel industry. And we've seen that the stainless steel output has been increasingly concentrated in Asia, with China and Indonesia together accounting for about 72% of global stainless steel production in 2025. And Europe, by contrast, has been losing market share in stainless steel due to weaker demand and also competition from Asian lower cost imports. So CBAM may provide some support to the European producers by increasing the cost of carbon intensive imports, but impact will remain limited for now in the short term. Majority of downstream stainless steel products are currently outside the scope of the mechanism, and we've heard that stainless steel producers would like to include further downstream products, which means that otherwise the producers are remaining exposed to global competition. And so we think that for now, as what we see, it may not fundamentally reshape the trade flows for ferrochrome in the immediate term, but progressively increase the importance of carbon intensity as one of the factors in procurement decision, alongside all the traditional decisions, including grade and security of supply. And just briefly to comment on the CBAM cost for high carbon ferrochrome, in the first half of this year, it stood approximately of €110 per ton. And this is not considered a significant additional cost if you compare to with the production costs faced by the European producers. These are very general observations, of course. I'm not able to comment further, given also competitive implication for compliance reasons. But I hope it helps.
Yes, definitely. Lots of good details in there anyway. All right, last question. This is for both of you. Maybe we'll start, Sheraz, we'll start with you. Okay, so we've mentioned that there's a potential risk that CBAM could longer term impact the flows, but let's say there's not a whole lot of impact near term because there are many other factors that must be considered when it comes to procurement of chrome ore and ferrochrome. So, you know, and given Tanisha's views on the power and the potential ore tax and all of these mechanisms that are trying to be put in place to support that industry in South Africa, if this capacity does return, let's say at scale, at some scale, over the next few years, so not just the next 6 months, but over the next few years, does global demand growth absorb it? Or, you know, you mentioned Kazakhstan, Zimbabwe as two sort of suppliers that follow South Africa into Europe. Does it displace those secondary suppliers?
There is one major China-funded project in Zimbabwe, and that is aiming at bringing 1 million ton stainless steel capacity in the country, which definitely therefore illustrates the country's aim to become a stainless steel producer and to add value. And therefore that will also reduce the availability in the midterm of Zimbabwe ferrochrome to the market. It is also important to consider if you look at other suppliers like Kazakhstan, for example, the grade of the ferrochrome, Kazakhstan ferrochrome has a higher chrome content, so we cannot say that it can fully substitute to South African material. What is interesting for the South African ferrochrome producers is that they are now returning to a market with fundamentals and which are completely different compared with the past. And therefore, the question is whether current growth will also be sufficient to absorb additional South African production, or whether increased availability will mainly result in displacement of other suppliers. Several factors will shape this outcome. We've seen China has been moving significantly closer to ferrochrome self-sufficiency, therefore limiting its role as an incremental importer. Europe is placing increasing emphasis of carbon intensity, supply chain resilience, and therefore protective measure also to protect its ferrochrome industry, and through measures such as CBAM. And we see several producing countries now are introducing policies to protect domestic processing capacity and to further add and value and beneficiate locally. So I would say that in a market where demand growth is uncertain, additional South African ferrochrome volumes would also compete for market share rather than simply meeting new demand. It's also good to note that South Africa has significant advantage as well because they have the ore, they have large chrome resources, they have the infrastructure, they have long-standing relationship with some consumers. And so I think that several factors need to be taken into account to analyze whether producing geographic areas could keep or gain market shares. And that also include energy, carbon footprint, and ability to adapt also to the new market environment. So it's a very complex question. I don't think we can answer it fully now, but I hope I've been giving some insights that can help thinking.
Yeah, absolutely, Sheraz. That's very helpful. Tanisha, do you have any thoughts on this last question as well?
I do. Thanks. Thanks, Sheraz. Thanks, Jess. I actually want to maybe draw this conversation through to what's happened over the last 2 days with the US, where the US government have basically signed, or Trump has signed an executive order which has created stricter rules for defense contractors and their critical supply chain, mineral supply chains. The US is a large ferrochrome importer, with South Africa being one of the larger exporters to the US. And part of this mandate requires defense contractors to basically look back into their supply chain to where they source their alloys and raw materials used within these industries. And I think that's opened up quite a bit of a market for South African producers, while they're setting up their own ferrochrome capacity internally within the US with several European producers. And I think that's what we might start seeing as well. I think Sheraz did mention a lot of the protectionist measures being applied to many of these industries, and the newer markets will open up and the traditional markets will start to close. And I think what we will start seeing is that fragmentation of what historically defined the ferrochrome supply chain, especially from South Africa. And the Sheraz mentioned in terms of Kazakhstan and even Zimbabwe, the chrome content within that ferrochrome is a lot higher. And South African ferrochrome plays a very significant role in the stainless steel supply chain that cannot actually be replaced. So over the short, medium, and long term, that demand will always drive some form of South African supply.
Perfect. Thank you, Tanisha, for introducing those ideas into the dynamics as well. So there you have it. These are the latest dynamics that we are thinking about and talking about in the chromium industry. Thank you all for listening, and hope we will see you at Project Blue's Ferroalloys Critical Materials Conference in Johannesburg in September, and the ICDA's Chromium 2026 in Paris in November. So a lot of events coming up this year. Any questions, please reach out.